Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. It's Monday. Stock market's back open. Dow's up about 100. Nasdaq's down about 50. Not much really going on yet. It's early in the day. Maybe that'll change. So what do we got going? Well, we had that big run up last week. Had a big run up the whole month of October. I think this run up is coming to an end. I think that I'm looking for a down leg. I think a down leg will start sometime this week. The S&P, it's sitting right below the 200 moving average. It may jump up and hit that. The SPY, that'd be at 404, sitting right at 400 right now. It's only 4 points off. Sure, it can bounce up and hit that, but I think the down leg is getting ready to start. I think there's a divergent in the Dow Jones. Now, if you look at the RSI, you'll notice that it did not go higher as the Dow Jones went higher. Also, the HYG, which usually leads the market up, is now following the market. It's not leading the market. This tells me that the market's getting ready to correct and come back in the other direction, have a down leg. That's just my take on the market. We'll see how that plays out over the course of the week. Well, let's get over to the real estate market. Now, real estate market, it's always fascinating to me. Well, there's a company called D.R. Horton. Matter of fact, they're the biggest builder of homes in the United States. So they're the largest builder, and they came out and they had some problems. They had their earnings report, and basically 1/3 of the deals got canceled on them. Buyers backed out. 1/3 of the deals in the fourth quarter, the buyers backed out, right? Okay, so that's not good. That's not good. That's a problem for them. So you see a lot of homes, when they build a home, they pre-sell the home. The home is usually pre-sold. Otherwise, they're just building what's called a spec home. They're building it to sell in the future. But most homes, they want to have pre-sold so they don't have to hold the inventory. Well, 1/3 of the buyers backed out. Now, they wanted to buy the home, but here's the thing. You see, prices are high and interest rates are high. Now, a lot of people, there's a demand. I agree there's a lot of demand, and people say, well, that's why the market can't come down. Well, if you can't afford to buy the home, the price eventually has to come down to where they can afford to buy a home. Even if they want to buy the home, they can't qualify for the loan. So 1/3 of the contracts that they had to sell these homes, well, they backed out. They just can't do it anymore. Now, here's the really fascinating part. Now, D.R. Horton, home builders, what they do is they go put down deposits to buy their next land, the land that they're going to build their next projects on. Well, D.R. Horton, they're walking away from a lot of these projects. They're leaving $34 million on the table in the form of deposits. Now, $34 million isn't that much to them, but my point is they penciled out these projects and they don't work with the 7% interest rate, so they don't want to build these homes. Now, they also have a problem, right? So they have a problem because inflation is going up. So it's costing them more money to build these homes. Look at when inflation of everything is going up and supply shortages is causing it to go up higher. So let's say inflation, let's just use my number of 15% a year, right? All right, and let's just use how much the prices have come down on homes. Let's call that 15%. For new homes, that's about what it is. It's over 10 and almost 15% for new home construction. Regular homes, it's down about 10%, but new homes is approaching down 15% for the year. So prices to build, inflation went up 15%, so it's costing them 15% more. This would be things like labor. Look at that. Construction workers, they're offering like $40 an hour, and they can't find any workers that want to work for $40 an hour. What are they going to have to raise it to? 50, 60, 70, 80 just to get the workers to build the homes. So their costs are going up. They're going up by, let's call it 15%, and the prices have come down by 15%. So that's 30% that got wiped out. Now, what is that? Well, that's their profit margin. Their profit margin's being wiped out. So that's why they're walking away from this land sales. They left their deposit on the table. They say, we don't want the land anymore. We want to walk away from it. We're not going to build because there's no point in building for free. Look at that 30% profit margin got wiped out. Sure, they could build and get them, maybe get them sold, but they'd probably end up losing money. So they're just going to leave that $34 million on the table and they're going to walk away. Now, the thing is here that what I see the problem is with new homes and with homes in general. All right, so you look at a starter home. Now this is where the millennials, they want to come in. Not just 2 or 3 years ago, they could have come in many parts of the country and bought a brand new just built starter home for about $300,000. Well, now that brand new starter home's about $600,000, and they can't really build many starter homes because there's so many fees to set up, just fees to the city, fees to set up the sewer, fees to set up the water. There's all these fees that get added onto the house. It doesn't make sense to build starter homes, so they build these McMansions. Well, no one can afford the starter home, let alone the McMansions. So the home builders are in a lot of trouble right now. They're in a lot of trouble. They have a lot of inventory, and that inventory is sitting unsold. They can't get it sold. Now, granted, they're offering more incentives. Now, what they try to do is they'll buy down the mortgage rate for you. See, mortgage rates are up here about 7.3%, right? And that's if you have really good credit. But anyways, that doesn't work for getting these new homes sold. So they'll buy down that mortgage rate for you. Now they buy it down for 1 or 2 years, so you can start at 4%, and then they'll bump it up to the 7 or 8%, so your mortgage payment will double. It's kind of an adjustable rate mortgage, but they'll buy it down for you to get you into the home so that you can qualify. A lot of people can't qualify, so these home builders, they'll buy that rate down. Okay, that makes sense, right? So they buy that rate down so you can get in. They also give you all these upgrades, let's call them upgrades, you know, the granite countertops. They'll put in air conditioning for free if you want the swimming pool in the backyard. They'll do that also just to get them sold. You see, what they got is a big problem on their hands. See, once the home is built, somebody starts to pay taxes on that. Now, the property taxes are about 1.2% in my area. Some areas it's as much as 2 or 3%. But the home builders have built the homes, so they're now ones that have to pay the property taxes until they get these sold. And that property tax can be a lot of money. I mean, on a $1 million house, that's another $12,000 fee for the year, right? Okay, so they tack that on. They're just losing money. They're circling the drain downward. So the home builders are in a lot of trouble right now, and they're going to see these fire sales. The bargains are going to come out. And I want to talk about a couple of other things real quick here. Anyways, we have that CPI number come out, and everybody's real happy because it's down at, that's called 7.7%. So let's say it was 8%. It was up at 9 before. Now it's down to 8. Now, do you think inflation is over? Leave me a comment if you think we come to the end of inflation, that the Federal Reserve now has this under control and that the inflation problem is going to go away. Now, I want to talk about why that inflation number came down. It came down for two reasons. Well, the first thing that came down is used car prices, right? Used car prices. Well, everybody went out and bought these new cars, right? And they way overpaid. I mean, the list price might have been $60,000, but they'd pay $80,000, right? And they're getting like 15,000 of these being repoed every month. And these are now the used car market. So the used car market's coming down because no one has the money to buy these cars. These cars are what would be known in the housing market as they're underwater. The loan is worth more than the car, so they went and repoed it. All right. So anyways, but they can't sell them up here where they want to sell them because the market's come down. So the used car market has helped out that inflation number. Now, the other thing that helped out the inflation number would be, well, it'd be the rent number. Okay, so they don't use actual rents. It's really weird to me. They use this thing called, I think it's a homeowner's inflation rent. They actually call up homeowners and ask them what they could rent their house for. Why don't they just use real rents? I don't know, but okay. So that number has come down also. Rents are starting to drop. For the last 3 months, they've been coming down. Now, that creates an inflation number coming down. And I think that rents will continue to come down. I think it's just getting started. It's really weird, though. So the price of houses is coming down. Rents are coming down. I mean, the housing market, it's just getting ready to get steamrolled. I mean, it's just getting started. I mean, sit back, grab some popcorn. This will have a downward spiraling effect. Now, rental market, I'll be the first to admit, it's been a very tight rental market, right? But right now, you're seeing vacancies. You're seeing offers offers of, 2 months free rent to move in for if you sign a year lease. You're seeing these discounts in the rental market. But you got to be careful in a tight rental market. There's a lot of scammers out there. Now, this is funny. What they do is they run an ad that's called on Craigslist of a house for rent. They say, well, there's tenants in there now, but they're going to be moving out at the end of the month. And if you put down $1,000 deposit, you can get this house. And they advertise the rent really low, but you can't go inside and look at the house. So you get all excited because the rental market's tight. You found this house in an area you like, so you send them $1,000 to hold it for you. Well, guess what? That guy doesn't own the house. He took your $1,000. You got to be careful. These scammers out there in this tight rental market, all right? Now, here's what's also interesting to me. Okay, the rental market is very tight, but as prices are starting to come down, what a lot of these big homeowners, the ones that own, 1,000 homes, 2,000 homes, then they own a lot of the homes in a certain area because they like to be able to manage them, so they keep them all in the area. But as the rents come down, they won't rent out the next home. They'll leaving them vacant. So there's a lot of vacant properties across the United States. Now, of course, not in your area. All your area, the rents are probably still high. Prices are probably still high. But they're keeping the house vacant. Now, that to me is just surprising. But if they put that house on the market for rent, it's going to bring down their other houses, and it's going to continue the downward spiral that's like in sales. Okay, like the house prices, once they start to come down, people start to get out. There's the fear of getting out. We had that panic buying on the way up, and you're going to see that panic selling, but you haven't seen it yet. The fear hasn't even really hit the marketplace yet. The sellers, they kind of got this, this nonchalant, well, I'll sell it if someone gives me the price Billy Bob got, but they don't get that price, so they just, we'll just take it off the market and we'll make it a rental. Well, as the prices start to come down, that doesn't work anymore for them because they got a mortgage payment to pay, and maybe the lower rent price doesn't meet the mortgage payment, so they go, maybe we better sell it after all. And you're going to get that pain in the housing market, probably the stock market too, but you're going to get that pain coming, that pain, the fear. The fear as things start to go down is going to be a capitulation at some point. Now, we're a good year away from capitulation in the housing market. This takes time to play out, but it is getting ready to just comes, it's coming down. House prices coming down. Rents are coming down. You can feel it. I mean, I don't know. In your area, I'm sure it's not going to come down. But in most places, it's starting to come down. It's coming down at a quicker pace, which is going to get that capitulation going, which is going to get those prices where there's the forced selling that I talked about in my last video, where people will be forced to sell, where people will have no alternative to sell. They will be forced to sell, and that will bring these prices lower. This is just my take on the market. I hope that in your area that prices stay up if that's what you desire. I'm Tall Mike. Get out there, everybody. Have a great Monday. We'll talk again later in the week. Bye-bye now.